Good day, this is the presentation of Group 9.
What are options? Options are financial derivatives that give the buyers the right but not the obligation to buy or sell an underlying asset at an agreed upon price and date. These options used by the holder to avoid losses and reduce risk from buying an underlying asset. There are two types of option, which are the call option and the put option. First is the call option. It allows the holder to buy the asset at a stated price within a specific time frame. So it allows the buyer to purchase that underlying asset but does not have the obligation to buy it. For a better understanding, here is an example. A potential owner of the house sees a new development going up. That person may want the right to purchase a home in the future for 500,000 pesos, but will only want to exercise that right when certain developments around the area are built after 1 year. Both parties can make an agreement and create an option contract. The buyer will give a money to the seller, which is called the option premium. This option premium is to secure that the house will not be sold to other buyer. After 1 year, the current market price of the house is at 600,000 pesos. If there is a development, then the potential homeowner have the right to buy the house at a strike price, which is 500,000 pesos. If there is no development, then the potential homeowner can walk away from the deal and has no obligation to buy the house and prevent the loss of buying that underlying asset. The next one is the put option. It allows the holder to sell the asset at a stated price within a specific time frame. To better understand this, there is an example. A purchases a 50 pesos put option on ABC company. Each option contract is worth 100 shares. So this gives him the right to sell 100 shares of ABC company at a strike price of 50 pesos before the expiration date. To complete the transaction, an option writer will need to purchase the shares at a strike price, which is 50 pesos per share. A is expecting that the price of the share will decrease after a few months. After 1 month, the current market price of the shares decreased to 40 pesos. Even though the current market price drops to 40 pesos, A can sell the 100 shares at 50 pesos, which is the strike price. So that's the example of a put option.
So hello guys, good afternoon. I will discuss the swap and the common kinds of swap. So swap is a derivative contract through which two parties exchange the cash flows or liabilities from two different financial instruments. So when we say swap, from the word itself, exchange of cash flows from two different financial instruments. So when we say naman financial instrument, example of financial instrument is financial asset, financial liability, and equity instrument. Example naman ng financial asset is cash, accounts payable or notes payable. Example ng equity instrument is issuance of stock, shares, investment of the owners, or the investment of the owners. Yan ang equity instrument. So swap is sometimes called a barter, or barter lang sila. So yan lang swap. So let us continue in common kind of swap, the interest rate swap. So interest rate swap is a forward contract in which one stream of future interest payment is exchanged for another based on a specified principal amount. So in this discussion, in this situation, it means interest rate. It means it is a forward contract which is one stream of future interest payment. So I give some example to understand more what is the interest rate swap. So, example, on January 1, 2020, Monton Company borrowed 5 million pesos from First Bank at a variable interest rate for 2 years. So when we say variable interest rate, it is not fixed or it is a changeable rate interest. Nag-change siya, nag-fluctuate siya. So, in this scenario or in this situation, Monton Company, to protect itself from fluctuation in interest rate, Monton Company entered into an agreement with Second Bank. So, dali nag-input na isa ka bank, which is the Second Bank, as the speculator to receive variable interest and to pay a fixed interest based on an underlying asset rate of 10%. When you say underlying, this is the rate of a bank. Interest rate of a bank. So in this situation, Monton Company shall receive a payment from the Second Bank based on 5 million pesos if the interest rate is more than 10%. If more than 10%, maka-receive si Monton Company from Second Bank. Then, we will make a swap payment to the Second Bank. Swap payment to the Second Bank if the interest on January 1 is less than 10%. So, dali lang siya. Kung more than 10%, si Monton Company, maka-receive siya o payment gikan kay Second Bank. Magbayad sa Second Bank sa iyahan. So, dalian na po, kung less than 10%, ang makadawat na po, ang maka-receive na po ng payment sa Second Bank. Kay si Monton Company, magbayad siya sa Second Bank if less than 10%. So, that's an example of interest rate swap. So, let us continue to the common kinds of swap. And the second common kind of swap is the commodity swap. So, a commodity swap is a type of derivative contract where two parties agree to exchange cash flows dependent on the price of an underlying commodity. A commodity is usually used to hedge against price swings in the market for a commodity such as oil and livestock. So, when we say commodity, these are the physical assets such as metals, energy, agriculture, oil, and fuel. Yan sa mga commodity. So, I give some example to understand also more the commodity sum. So, example, Monton Company needs to purchase 250,000 barrels of oil each year for the next 2 years. The prices in the equivalent oil is 3,500 pesos per barrel, and in 2 years, 2,550 pesos. 2,550 pesos per barrel. So, in this situation, there is a fluctuation of price in this situation. So, halimbawa, si Monton Company is a canning factory. Ang oil is very important kay walay oil, dili maluto or walay lamin ang produkto. So, Monton Company is heavily dependent on oil for their operation. Fluctuation in the price of oil can be particularly challenging for their business. So, Monton Company entered into a commodity swap agreement to reduce their exposure to any volatility in the oil market. So, when we say volatility, madaling matuyo, easily evaporated at normal temperature. So, halimbawa, magsilaw siya, permit siya maabrihan, dali lang siya mag-decrease ang iyang amount. So, kung dali mag-decrease, dali mahurot. So, kung dali mahurot, Kailangan nila mag-order or mag-purchase of oil para sa ilang operation. So, in this situation, naka-refer dali ang commodity swap agreement sa price which is to, halimbawa, sa first year nimo na purchase of oil, which is 2,500. 2,500. Dari, lang siya imong bayaran, which is in the right in a contract of agreement. Na imong bayaran, so within the year, 2,500. Halimbawa, kung dili ka magsulod sa commodity swap agreement, dili siya magsulod, pwede na mag-fluctuate iyang bayaran ra. Pwede dili 2,500 ang year, pwede dili, pwede po magtaas pa na o pwede mabubuan na. So, dili siya constant. So, dapat magsulod ka for reducing of your expense para for securement, para ma-secure po imuhang ang delivery. Ma-secure nimo na mag-deliver dyan na sila because naman na sa agreement. So, halimbawa na po sa next, after a year na po, 2,550 lang po imong bayaran per barrel. So, mawala pa na siya, imong bayaran, hindi na siya malapas na lang, ang imong bayaran. 2,000 per barrel, 2,550 rather per barrel. So, that is the purpose of commodity swap agreement to what do you call that? Para makatipid ka sa imuhang bayro nun sa kada lang na year o sa next year. Okay? So, in this discussion, I will discuss the currency swap, the third common kind of swap, the currency swap. A currency swap, sometimes referred to as a cross-currency swap, involves the exchange of interest and sometimes a principal in one currency for the same in another currency. Interest payments are exchanged at fixed dates through the life of the contract. So, when we say currency swap, that's the value of money. Diba? Currency in Philippines, the currency is the peso. That's our currency. Like America is US dollars. So, to understand what is currency, I give some example. So halimbawa, an American multinational company may wish to expand its operation to the Philippines. A Philippine company is seeking entrance to US market. So, happy is Pilipinas, bago mo musulod sa mo ang bangko, sa mo ang teritorya, unique entrance sa inyo. So, kasi sa American company, nakasuffer siya of financial problem. So, will typically face against from the unwillingness of Philippine banks to extend loans. So, kaisip sa American company, kasi dili ko rata welcome to sa Pilipinas. Kaya, inanak na dyan. So, si American company po, dili guguron sa pasulod dito sa Amerika. Kay, siyempre, bilangin mo sa Amerika, sabi ni Philippines, harsh kayo. So, nasatundin nyo, lahat of companies has a competitive advantage in borrowing in domestic market. So, let us assume that Philippine company cannot borrow funds in American bank. So American company will borrow the funds that Philippine company needs from an American bank, while Philippine company borrows the fund that American company need through a Philippine bank. So, there in a situation, there in a scenario, si Philippine company, nanghiram siya sa American bank. Nanghiram siya. So, sa American bank, di ba, nang siya, pasulit sa inyo gani. So, alam sila may mo, gusto man sila mag-extend sa mga loans. So, sa American company, ako na lang mag-borrow sa funds na kailangan ni Philippine company from American bank. So, si American company na lang ang nanghiram of funds sa American bank for the needs of Philippine company. So, sa Philippine company po, siyempre, dahil po to be fair, the Philippine company borrows the funds that American company needs through a Philippine bank. So, bali, nag-exchange lang sila currency nila. So, halimbawa, ikaw, marag ka ni, marag give and take lang ba? Kasi mo ihatag sa makuha mo, po na ihatag sa imuha. Kung saan mo madawan, mo ba? Madawan. So, that's an example of currency swap, which is so bad. Companies has effectively taken out a loan for the other company. So, the loans are being swapped. Swap yan din sila. So, that is the currency swap. So, hello guys. This is the last common kind of swap, the equity swap. So, equity swap is a transaction in which the obligation or debts of a company or individual are exchanged for something of value or equity. So, when we say equity swap, an equity swap is like an interest rate swap. Pero, isa lang yung gina-refer na institution or isa lang ka-entity yung gina-refer. So, equity swap is a sample of equity which is invested by the owners. Invested by the owners. So, example, Mountain Company, a multinational company, borrowed 5 million pesos to First Bank to invest in the stock market. A bank has a variable interest rate for 2 years. So, katong giulan nga 5 billion ni Mountain Company, i-invest din sa stock market. Kaya gusto gano'n niya, magtako ang iyang kwarta. So, siyempre siya pag-invest, pagbayad mo dyan. Interest na to. So, in first year of payment, which is halimbawa 10% lang yan ginabayaran per year. So, dali makasustain pa si Mountain Company sa iyang payment. After through the years, due to fluctuation of interest rate, and second year, the interest rate per year become 12% or higher. Kasi nag-taas na siya. Hindi na rin yung nakasustain pa. The Mountain Company become insolvent to pay his debt. So, to pay his debt, he treat the value of stocks to bonds for the cancellation of the debt. So, when we say bonds, iba loan na siya. Additional information na lang. Bonds is also a loan, but it is also referred to lender as an interest income. Kung sa lender siya, interest income nila siya. Pwede na siya ma-recognize as income. So, additional information. So, dali, i-exchange niya or i-trade niya yung value sa stocks para siya for the cancellation of this debt. So, that is an equity swap, which is stocks is an example of equity instrument. So, I hope you understand more what is the equity swap, and also to clarify me rather, ask me a question or isa lang yung wala nasaktan. And I hope you understand also. And I want to thank you and goodbye. God bless everyone.
Money market. Money market has become a component of the financial market for buying and selling of securities of short-term maturities of 1 year or less, such as treasury bills and commercial papers. So, ang money market, it refers to trading in a very short-term investments. Ibig sabihin, 1 year or less. So, ang purpose ng money market is, for example, meron kang certain amount of money na hindi mo pa gagamitin. So, instead na ibulsa mo yung pera mo, it is much better na i-invest mo siya sa money market para makagain ka ng interest. So, paano mag-invest ng pera sa money market? So, you may invest in the money market by purchasing a money market mutual fund, buying a treasury bill, at pwede din mag-open ka ng money market account sa bangko. So, again, money market is an organized exchange where participants lend and borrow large sums of money for 1 year or less. Next is ang functions of money market. First, we have financing trade. So, money market provides financing to local and international traders. It provides a facility to discount bills of exchange, and this provides immediate financing to pay for goods and services. So, ang money market, nagpo-provide siya ng financing to local and international traders who are in urgent needs of short-term funds. So, halimbawa, when you are a businessman, so if you are lacking of funds, you may borrow money from money market. And money market also makes funds available for other units of the economy such as agriculture and small-scale industry. So, yun na nga, if you are lacking of funds when you are having a business, pwede kang manghiram ng pera sa money market. Next function is central bank policies. So, itong central bank, sila yung responsible for guiding the monetary policy of a country and taking measures to ensure a healthy financial system. And through the money market, the central bank can perform its policy-making function efficiently. So, paano? For example, the short-term interest rates in the money market represents the prevailing conditions in the banking industry. So, through it, magaguide nila ang central bank para makadevelop ng appropriate interest rate policy. So, ang basis nila is yung mga short-term interest rates. And also, the integrated money markets help the central bank to influence the sub-markets, and they will implement its monetary policy objectives. So, yun ang second function ng money market. Central bank policies para makadevelop ng appropriate interest rate policy as well as to implement its monetary policy objectives. Then, third is growth of industries. Through commercial paper and finance bills, they can easily borrow money on a short-term basis. So, di ba, ang money market, it refers to trading in a very short-term investment. So, the money market, they provide an easy avenue where businesses can obtain short-term loans to finance their working capital needs. So again, if you are starting a business, so pwede ka lumapit kay money market to obtain short-term loans if you are lacking of funds to finance your working capital needs. Kasi when starting a business, due to large volume of transactions, mayroong mga businesses na makaka-experience ng cash shortage na kasi bibili pa sila ng raw materials, paying the employees, or meeting other short-term expenses. So, if your business is lacking of funds to produce those, pwede kang lumapit sa money market. And last function of money market we have is commercial bank self-sufficiency. So, the money market provides commercial banks with a ready market where they can invest their excess reserves and earn interest while maintaining liquidity. So, yun na nga. If meron kang excess reserves or meron kang certain amount of money, you can invest it to money market para maka-earn ka ng interest as well as you can maintain your liquidity. And The short-term investments, such as bills of exchange, can easily be converted to cash to support customers' withdrawal. So, also, when you are facing liquidity problems, pwede kang manghiram ng pera sa money market as an alternative to borrowing from central bank. Kasi, pag naghiram ka ng pera sa money market, ang advantage doon is, sa money market, ang charge ng nila sa interest is lower compared to central bank. So now let us proceed to the types of instruments traded in the money market. So in first example, we have treasury bills. So when we say treasury bill, it is a safe investment issued by the government. So what are the common things being done with treasury bills? Ang mangyayari, may bidding or auctions, and then kung sino yung highest bidder, siya yung investors na pwedeng i-allow na bumili ng treasury bill at a specific maturity date. So meron tayong treasury bill na may 3 months or less, meron ding treasury bills na 3 months or beyond. So it is stated that if a treasury bill has a longer maturity date, mas malaki po yung investments with interest na matatanggap ng investor. So the reason why meron tayong treasury bill or bakit nagkakaroon ng treasury bill, it is because it is a way of the government to lessen or reduce the overall fiscal deficit of the country. So, they borrow money from different capable investors. In addition to that, kapag sinabi nating treasury bills po, if ikaw ay isang investor, you may just collect your investments with interest after the maturity date. So the question is, halimbawa ikaw as an investor, you bought a treasury bill which is a 3 months treasury bill. And then, it is stated na from January to March. Pero ngayong month is February. So, probably, magmamature yung treasury bill mo next month pa. But there is a problem. Kailangan ng investor or ikaw as an investor, kailangan mo ng pera as in at the moment this month. I mean, ngayon talaga kailangan mo ng pera. Pero it is stated na matatanggap mo lang yung pera after ng maturity date. Ano ba ang gagawin mo? So ikaw as an investor, pwede mong ibenta ang iyong treasury bill sa other financial markets at prevailing rate for you to have cash on hand right away. And usually these treasury bills are appropriate for those people na malapit na pong mag-retire. So that is a treasury bill. So the next slide is an example of a treasury bill. So now let us proceed to the certificate of deposit. A certificate deposit, or what we call CD, is issued directly by a commercial bank, but it can be purchased through brokerage firms. It comes with a maturity date ranging from 3 months to 5 years and can be issued in any denomination. So generally, when we say certificate of deposit, it is a type of savings account. So meron tayong alam na iba't ibang klase ng savings account. Merong savings account na anytime pwede ka makapag-withdraw. But what makes certificate of deposit different? Certificate of deposit po, or CD, is a special type of savings account in which you can withdraw, but there is an agreement not to withdraw or to make any withdrawals for a certain period of time. So at the end of the time, you can get your money back plus whatever was earned in the interest back. So that is CD, or certificate of deposit. So here is an example of certificate of deposit. So now let us proceed to commercial paper. So when we say commercial paper, it is an unsecured loan issued by large institutions or corporations to finance short-term cash flow needs, such as inventory and accounts payables. Is used at a discount, with the difference between the price and face value of the commercial paper being the profit to the investor. So one example of this is the payroll. Kasi nga, di ba, it is stated that it is issued by large institutions or corporations to finance short-term cash flow needs. So usually, yung mga sahod ng mga nagtatrabaho is a short-term. Binibigay yan as a proof na babayaran sila ng institutions at a certain period of time. So the next slide is an example of commercial paper. Banker's acceptance. It is a form of short-term debt issued by a firm but guaranteed by a bank. It is created by a drawer, providing the bearer the rights to the money indicated on its face at a specified date. So, it helps to facilitate trade transactions between two parties when they do not have any established relationship. This is most used in the import or export of goods and is issued through the letter of credit. So, let's say for example, you were the importer and you are going to purchase merchandise in a foreign country. Example is Germany. So, you were the importer and Germany is the exporter. But both of you do not have any established relationship. So you are going to ask your bank that they will going to issue a letter of credit. This letter of credit is a document that is being guaranteed by the bank for the payment for in a specified amount and time. So it will state that the exporter will receive funds upon presenting the shipping documents and the letter of credit. Then later, the exporter's domestic bank then sends a time draft stamped accepted. Then after that, it will be converted into banker's acceptance. So bago siya magiging banker's acceptance, letter of credit muna siya. So stated doon na ito si exporter may marireceive na fund mula sa kay importer in that amount in that particular day. So, this situation, makikita natin na banker's acceptance, it is a negotiable instrument being issued by and guaranteed by a bank for importer's promise to pay the imported goods. So here is an example of banker's acceptance. The last one is repurchase agreement. It is also known as repo. So, it is a short-term form borrowing that involves selling a security with an agreement to repurchase it at a higher price at a later date. So, halimbawa, ikaw si borrower. Nangangailangan ka ng cash, but then, the only thing you have is only the security. So, maghahanap ka ng lender na magiging buyer ng security mo. So, upon selling the security, bibigyan ka ng cash, makaka-receive ka ng cash, then you will give the security to him or her as a collateral. Upon selling the security, magkakaroon kayo ng agreement na pwede itong i-repurchase but at a higher price na. Kasi nga, di ba, walang magpapautang na walang interest. So, pag ma-repurchase mo ito, mas mataas pa nung sa amount na nakuha mo. So, yun yung repurchase agreement. Then, there are three types of repurchase agreement. These are tri-party repo, specialized delivery repo, and held in custody repo. Dito sa tri-party repo, mayroong involvement ni bank. Si bank na yung magmamanage ng pagpasok ng pera sa credit ni lender or yung buyer, then yung pagbabayad ni borrower. Next is specialized delivery repo. Dito yung papasok yung mga bond guarantees. And held in custody repo, which is custodial account. Ikaw yung may-ari, but you were not the bearer. Para siyang, halimbawa nito is, yung mama mo ay, ikaw binigyan ka ng pera. Then suddenly, yung mama mo sinabi niya na, ipunin mo yan nak, pero ako yung maghahawak ng pera. Yun siya, para siyang custodial account. Yun yung held in custody repo.